All right, we are back. I'm here with Justin Donald, and I'm really curious because this is something that's coming up a lot, and you hear it in the news, and some of it's maybe just fear tactics or what have you, and then some of it I think is real. But what's going to happen with the market? And so today, Justin's going to tell you exactly what's going to happen with the market because I know he has those magic abilities. Justin, man, welcome to the show. How are you?
Thanks, Chris. It's great to be here, and I'm excited to spend some time with you and with your audience here today.
No
Uh, there,
pressure, right? That's quite the promise I just delivered.
yeah, well, no one has the crystal ball. I wish I did. I've got some ideas. I've got some thoughts. I certainly have some beliefs, some philosophies, and some strategies that have worked over time.
Got it.
But no one for sure knows. But I think there are signs. I think there are things that you can pay
Yeah.
attention to and make some good, educated decisions around that data.
Got it. Awesome, man. So, talk to us about you. I know you've got some entrepreneurship backgrounds, obviously investing background. So, what led you to doing what you're doing?
Yeah, great question, Chris. So for me, I've been an entrepreneur for most of my life. In some way, shape, or form, I've been building companies or I've been coaching people on how to do it.
Cool.
But what ended up happening is over time, on the more consulting advisory side, I started noticing that I was drawn to talking about people or talking to people about what to do with their profit. So we would originally start talking about how to scale a company and kind of solve for whatever needed to be solved for. But most entrepreneurs put all of their profits right back into their business. And
Mm,
so that was a real big eye opener to me of, wow, everyone's really putting all their eggs in one basket. And if they're not,
right.
they're probably utilizing the stock market as that extra basket. And still, with that, it's not very diversified. So that is kind of my overall takeaway and what kind of morphed into a practice of helping entrepreneurs scale into a practice of helping entrepreneurs invest.
Yeah. Let's jump right into it, man, because that's the core of what I want to talk to you about. And what you just described is exactly where I feel like my wife slash business partner and I have been for many years, right? Where we know we should have been investing. We are actively investing now, but there's just so many ups and downs with starting a business and like getting over that quote unquote hump. And then I think sometimes when you get over the metaphorical hump, you just create a new hump, right? It's like, well, when I get to, I'm into 500,000. Okay, when I get to 1 million or when I get to six figures, right? So you just kind of keep moving back the goalpost. So what are some basic practices that you recommend when you know it's time, right? Or is there a formulaic process that you typically stand by? That's like, this is when it's time to stop doubling down on the business or at least to start diversifying elsewhere.
Well, I think the time is as soon as you can make the decision to do it, because you're always going to move the goalposts. And this can be with business revenue or profit or whatever it is, whatever, metric you're looking at, or it could just be net worth or, cash flow that you have. Because whenever you achieve whatever it is that you want to achieve, most people that are entrepreneurs because they have this drive and this desire to do something more and to do something bigger. And so
Right.
when they accomplish whatever it is they set out to accomplish, and it doesn't matter what the number is, because once you get there, it's boring until you reset the new thing.
Mm,
So the goalposts are always going to move. There's never going to be a number where an entrepreneur is going to just be able to say, all right, this is it. At least the majority aren't. I mean, you might have some people that get to a stage of life where they really see their business as a lifestyle business, and maybe they're not trying to scale it and they're just trying to
right.
maintain. But for most people, the goalposts are going to move. And even for a lifestyle business, the goalposts will still move on lifestyle costs and
Sure.
net worth and when have you arrived and when do you need to continue journeying. So it's just such a fascinating process. But at the end of the day, I always ask people, how long does the average business stay in business?
Mm,
Because most businesses fail at some point in time. They
yeah.
could be highly vibrant and successful for a period of time, and then overnight they could fail. And every entrepreneur should recognize that that's a possibility. And
Yes.
that could just be, something weird with the pandemic and everything changes.
Sure.
But it could just be, times that change in the way of doing business, or, a fad or whatever it is, it just changes, new technologies. So I think that entrepreneurs should be careful that they aren't putting all their eggs into their one singular basket of their business, or maybe it's a collective group of businesses, because I do think that that's very risky.
Do you think that it's maybe this is completely anecdotal, but I would assume that other people have felt this way as well. And I'm just going to go pure curiosity here because, right, that's the only vantage point that I have. I think that specifically in people's, in their first business, and I learned this the hard way. Like first business, now I've had several businesses, right? But first business, experienced the rampant growth, and probably could have been to the point where we were spreading our money or diversifying elsewhere. Didn't do that. What happened is what you described, right? Things changed, things happened. I got sick. I got deathly sick, and I lost that business. And I, to this day, still kick myself for not having diversified further, because it really put a lot of strain on us to get something else off the ground and get back on solid ground, right? It was a really, really, really tough season of our life because of that. However, I will say this, and that's the reason I'm providing that as context. I was very emotionally attached because it was my first business, and it's like, this is my baby, and I have to support it and nurture it and make sure it's provided for and has what it needs. And largely, I think a lot of us, we do that to our own detriment, meaning ourselves personally, right? We'll give to the business. Do you think that's a lot of what's going on? It's just an emotional, maybe somewhat irrational connection to providing for this business that people are trying to build?
Yeah, I think that it's twofold. So number one, I think that you're right. It could be emotional, and it could be that you don't make great decisions because of that, because it's like you're in, a bad relationship, but you don't see it. Everyone else does, but you just don't see it yet. Sometimes that's how business can be. But other times, the argument that I hear all the time is, well, I'll make the best return if I put it back into my business.
I was going to say that next, so I'm glad you're covering it.
Yeah. So, these are the two things that I hear all the time, because this is the world that I live in. And I have the unique vantage point of being the entrepreneur that went through all this as well.
Yeah.
So, I have started companies, scaled companies. I have bought and sold companies. I have consulted and helped others do the same thing. So I've done it with my own capital and with my own sweat equity, and then I've helped other people do it. So I've lived on both sides of this fence. And so, the argument of, well, I get the best return, I can get a 30% return on my money by investing it back into my business because of XYZ, but it's not a risk adjusted return. And most people are, very, I'm going to say emotional about their business, but I'm going to say like completely, just in a different world. So for example, I have people all the time say, well, I can't wait to sell my business, or I'm going to sell my business for X, but it never sells for X. It sells for 50% of X, one half of X, if even that. And some people can't even sell their business, right? Because there's a bias. The bias is, how valuable is your business if you're not in it? Have you automated it? And so this is a whole nother conversation, but it goes back to this beginning thought of, you have a bias in your business, and for the amount that you invest into your business, I think you should I think all entrepreneurs should figure out how much it is that they need to invest, so that way they're not stagnant, that it is growing. But it's not 100% of profits. It never is. Could it be? Sure. Does it have to be? No. You can still grow without 100% of profits. And so instead of having that bias that your business is always going to be there and that income's always going to be what it is, or that it's always going to grow, I think it's important to realize that that's not the case, and to plan as if that isn't going to happen, because you'll make different decisions. Just like you said, you'll respect the capital and the results a lot more, and the profits a lot more once you've lost them. And if you can figure out how to do that without actually having lost them, if you can do it vicariously through you, Chris, I think that everyone's a step ahead of the game.
I'm going to provide a counter argument that I assume you're going to agree with. I think that when you are diversified, when you're not putting all, like, let's say you're just doubling, they make the argument you made, which is, yeah, but this funnel and these Facebook ads are clicking right now, right? And like, I could get a huge rate of return on that. So why would I put my money in something that might get a 7 to 10% annual return? Like that is so minimal compared to what I'm doing on the other side of things, especially if you hit scale. However, here's the thing. I think there's a degree of, I want to say safety is the word that comes to mind, but I also think there's a degree of being able to make the right decisions in your business because you know you have a safety net you've built for yourself outside of the business. Would you say that that allows you to act with a different degree of confidence in the decisions that you make in the business because you're diversified?
Yeah, 100%. So think about it this way. Let's say that you had enough assets or passive income generated to cover your lifestyle. You don't need your business income at all. You don't need a penny of it. I guarantee you will show up to your business differently. You'll make decisions differently. So I work with a lot of entrepreneurs and I teach them, I coach them on how to buy these assets that produce income that covers their lifestyle. And in 100% of the situations where people still own their business, because I have some of my clients that still own their business, they want to exit or they want to grow it. I've got other clients that have already exited and need to figure out what to do with that capital. But in every situation where there is someone that most of the time will tell me emphatically nothing would change, every single time when their expenses are covered or their lifestyle's covered or even just their business expenses are covered by passive income, the game changes and they make different decisions and they are willing to try different things and innovate in different ways and hire different people to take positions that they otherwise wouldn't have. And it's easier for them to replace themselves in the business. On just so many levels, it's easier and it's a better situation.
I love that you just said that was amazing advice. I have transitioned into looking at my business as more of a commodity after my first business. I always compare it to your first love, right? It's always hard. It's just different. I think we view our businesses as too much of an extension of ourselves versus a commodity or an asset that can be bought and sold and traded and so on and so forth. Would you think that's a good way of viewing things, just so you're having a rational, logical approach to how you're spending your time and resources?
Yeah. View your business as a commodity, you're saying?
Yes.
Yeah, I think that there's probably I think that is a healthy way to look at it. I think that you could look at it as your most valuable commodity.
Sure.
I think that it's smart to not put all your eggs in one basket. So, you could diversify into other commodities or other investments. But, on so many levels, if you look at this like it's your only thing, like it's your only shot, I feel like even that mindset is going to limit the potential of what you could do.
Right.
My first business, I thought it was great. And I thought, could it get any better? And how lucky I am to have this. But what I didn't realize is that first business created the next business and the ideas for the third business and so on and so forth. And my future businesses were so much better than my very first business. And then just what I learned, like the mistakes I learned, even in how I structured it. And I mean, there's just so much that whatever your business is now and however good it is right now, it can be better. And you might as well plan for that, because most businesses don't even last a decade. Right. And so what happens if your business becomes obsolete? How do you pivot? And when you do pivot, do you have passive income coming in to cover that pivot?
Right. Yeah, I guess the reason I have made that transition, and so I want to qualify why I said what I said, and I'm glad you kind of reiterated that was probably a good way of viewing it, is I think people, if I bought and sold a stock, right? Let's say I bought Amazon, I wrote up Amazon, I sold Amazon, I don't have Amazon anymore. I think that they would view that as a win, right? Like, hey, I made money off of Amazon. Then you look at their business, and let's assume they did well. They made money for a point in time. The market turned or whatever happened. The opportunity wasn't as prevalent as it was when they started that business, and they closed it or exited or whatever. I don't think that they view it the same way because of the emotional attachment that they have, right? And that's what I meant. Like, I'm trying to change my own paradigm around my businesses and viewing them as commodities. Like, sure, this iteration of what I'm doing, it might not exist forever, and that's fine. But being able to view it that way, like a deck of cards, to me, just gives me some freedom to act and do the things that are necessary, not things that I'm doing just because I have an emotional attachment to that business.
Yeah, and I think that's brilliant. Yeah, as much as you can take the emotion out of it, You're going to make better decisions in general. You know,
Yeah.
if you look at the S&P 500 index, if you look at the companies that are part of that, when it was first created and today, how many are in it, you're going to have the realization of, wow, okay, even the biggest, most successful, largest 500 companies aren't even part of the S&P 500 today.
I know. I was just watching, Justin. I was just watching on. It's funny that Netflix did it. Netflix did their little docu-series, or I think it's just a documentary, just one hour-long thing on Blockbuster. And what's funny is that they're monetizing the people they once pitched to buy them out, and it got laughed at in their faces. And at one point in time, I didn't know this, and watching the documentary was interesting. At one point in time, a new Blockbuster was opening every 17 minutes. I mean, you talk about a monopoly. I mean, they were the monopoly. And they don't exist today. I think they're down to like 3 to 6 stores that are not corporate stores, obviously. They're just individually owned and run to the same capacity they run before. And it's like there was a moment in time where that was a brilliant... And they made some really innovative decisions to get to where they were, like very disruptive in so many ways. And now they don't exist anymore. And it's just crazy that we think somehow we're immune to that as small business owners, as startup entrepreneurs.
Yeah, and the book is fantastic. I don't know if you've had a chance to read the book on Netflix and how that started, but you learn that story and you learn the ups and downs and you learn like how they got laughed at. And I mean, it's actually just kind of a brilliant way of happening. You've got, these people that think they're bigger than life and that just not even paying attention to the trends and to the writing on the wall. So I feel like it serves them well for how they acted and how they even treated the Netflix founders. But that's it. And by the way, this one wasn't, I mean, today you can look at it and of course, hindsight's 2020 and you can say, oh my goodness, how did you make that mistake? But you could see the trends even at that time. So I can't believe there wasn't someone in place. But the problem is, and this is what all entrepreneurs or most entrepreneurs are going to face, is that they're going to be so in the weeds of their business that they're not working on their business. They're not strategically planning for the future. They're not looking at the innovations that can impact it in a negative way or a positive way, because most are in the weeds. They just don't have the time. Yeah. And they do have the time. They just choose not to make the time to turn off. I have something I call that I just do. I just think it's think time in my week where no electronics are on. I'm not interrupted. It's my time, 2 hours. And I just think I'm proactive and it's my time to create and ponder and strategize. And that has served me really well. I feel like most people do not do that in their business. And so they're always in reactionary mode. Something happened, react, put this fire out. Okay, what's, oh, this person needs something from me. Let me do this. And they feel like, that their job is just to like solve problems all the time.
Yeah.
But really, that's not it. The entrepreneur, you got to solve some problems, but you got to get ahead of problems.
Exactly.
You got to be thinking, you got to have someone else that's solving problems so that you can think about the future of the business and the things that no one else is thinking about. And I can tell you that my best decisions and my best thoughts and my best innovations all happened in time where I didn't have anyone able to get to me, that I wasn't able to, no one could bombard me for my time.
Yeah. Two things I want to highlight you just said, the time and space. I know I've mentioned this many times on my show. Warren Buffett can spend entire mornings just thinking, just blank space. So I'm glad you do that. And I want others to adopt that as well. And I think we get too much in the hamster wheel with doing. The second thing you said that I want to highlight is the mistakes, getting caught up in the weeds with things that are happening in the business, right? Errors that you're trying to fix, problems that you're trying to solve, what have you. I always say this, but if you're having to address an issue more than once, it should be one and done. You should create a system or somehow fix that problem so you move on to other things. And I think some people, they start to, it's not a masochistic thing, but I think they start to identify their value in the business with being able to fix those problems, right? And that's not at all the job of what an entrepreneur should be. So I wanted to highlight that you said that because I think that's extremely profound and people should really take that to heart. You mentioned something else, though. You said something about time, right? And people say, well, I don't have enough time to do that. So you need to make time. I think one of the issues, Justin, that people have when it comes to now thinking about investing elsewhere is they're already perceived to be stretched bandwidth-wise with their own business. And I think there's a little bit of maybe false narrative around the time it's going to take to be actively investing, but then also being concerned because they've heard the stories where people lost half their portfolio because the market crashed, or they made a bad decision. And I just think there's some fear around losing what they have acquired. So it's better off just sitting in an account somewhere. So can you kind of speak to some strategies that maybe work well for the busy entrepreneur? Is it investing in, you mentioned the S&P 500, is it buying index funds, right? Is it doing something like that where they can be passively earning, but not having to be fully invested like somebody like yourself that just knows market trends and stuff like that, this individual stock picking? What are some strategies they can do?
Sure. Great question, Chris. And here's the one thing I will say is if money's just sitting in your account, you're actually losing money because the rate of inflation is much higher than what any of the, professionals say
Right.
it is. I mean, remember, these are the people that, the people telling you what inflation is have a vested interest in keeping it low, whether
Right.
it's low or not. So the reality is, in the last year, 40% of the total dollars in the U.S. were just printed out of thin air.
I was going to ask you about this. That is terrifying. That is a terrifying statistic.
Yes. So anyone who says inflation is 2% or 3%,
That's a joke. It could be that this quarter.
so wrong.
Yeah.
Yeah. So if your money's just sitting in an account, you're losing money. If you're just barely making something in a money market account, or, you're losing money. And most people don't realize how much they're losing to fees as well inside of the stock market and using advisors. And there's a different way to do it, so I have a couple different thoughts on this. Number one is we were talking a second ago about kind of like ego in the business. And the reality is most entrepreneurs have an ego. It is their business and they want to be there to solve problems. So they're always the bottleneck until they can figure out a process or some sort of standard operating procedure that can remove them. They're going to be that bottleneck. And at a certain point in time, you can set that up, but as business grows, it's going to happen again. And you're going to keep being the bottleneck over and over. And you have to figure out how to remove yourself constantly. So the goal is to get yourself out of the way of the success that you have and buy yourself the time and the space to be able to think more proactively on your business and be able to think more proactively on your investments. So, something that could easily be done in investing is just finding some safe and secure assets that you can invest in so you're at least not losing money. So if you're going to invest long-term and you did, an index fund because you don't want to take the time to figure anything else out, I think that is a good place for some assets to have some exposure long-term to the U.S. economy. I think that's good. I wouldn't put all your eggs in that basket, but I think it's a good start. But I think that there are great places to invest that have nothing to do with the stock market. I've specialized for the last 15 years in alternative investments. And so I have probably 1% of my portfolio, if even that, I would say 1% at max, that has exposure to public equities in the stock market. And the rest of it is, real estate, operating companies, debt. I'm a huge fan of debt. You can structure debt where you have a collateralized loan where you have 3 or 4 or 5 times the value of your loan or investment into something. So if anything goes wrong, you actually get an even better return than whatever the agreed to terms are.
Right.
So there are a lot of different ways that you can, invest money to not lose it. But if you're just letting it sit in your account, you're losing money. And if you are investing it with a professional money manager, the odds are pretty good that you're losing money because we've been in a bull run. And even inside of a bull run for these last, 11, 12 years, the new numbers just came out for 2019. 2020s haven't come out yet, but only 5% of all money managers outperform the S&P 500 index.
I know.
Right? So 95% of them not only did not perform it, but you paid them to not outperform it.
And you still owe the money whether they did or not.
Yes. So they win no matter what. So you've got taxes that you pay. You've got fees that you pay. You've got inflation.
Right.
So, if you're really going to make any money, truly, if you're making 10% in the stock market, your take home is probably 2%.
Right.
So, and that's another thing. People are like, just disillusioned. It's like, I think that I'm I'm making a 10% average rate of return.
Yeah.
And you believe that that's the case. But if you track the real dollars and what's really happening, you'll find out, the the real truth that you're making a lot less. And so on the private side, to me, it's just easier to make a better return and have more control and more protection. If the stock market goes down, there's nothing you can do. You can't control that. But if you invest in an area that you know well, in an asset class that you like, that has proper collateral, that has a management group that's been doing this for 30 years, you're probably not going to lose. And to me, I'm okay not even making huge returns as long as I don't lose. So the goal is to not lose money, as Warren Buffett says. I don't have to get a 20% return, though I often do. I mean, that's what I'd like to be earning anytime I invest. But I would rather take a 10% return and just know that I'm not going to lose money.
Exactly.
Like a safer deal.
Exactly. And I guess that's where, so maybe I'll just use, again, my vantage point. I'll just use my example, and maybe this is something that other entrepreneurs want to follow, or maybe you think that's crap, and please tell me if you think it is. But you mentioned something, you talked about only 5% of money managers actually beat the market. I'm pretty sure that was highlighted in both Money Master the Game and Unshakable by Tony Robbins, which is where I picked up that statistic as well. And he really emphasizes the game that we can play, right, is the index funds, and that's what I mentioned. So my wife and I started working with Creative Planning, which is a company he's involved with out of Kansas City. We're diversified upon diversified, but primarily, as I understand it, is index funds, right? And it's both foreign and domestic and different asset classes and stuff like that. So very, very, very diversified, like categories upon subcategories. I mean, it's crazy. I've looked at it, I'm like, wow, you guys are really diversified. So here's why I bring that up. I have bought into the rule, maybe through a mentor of mine, I think is where I picked this up, to really focus on what I'm good at, which is building businesses, but then saying, okay, here's a set percentage of money that I'm going to pull out. I'm going to make myself do it, and I'm going to contribute that to my portfolio, and have these guys whom I've vetted and trusted, who I'm paying 1% annually, 25 or 0.25% a quarter, to do this for me, to have a really diversified portfolio. Is that something? Now that doesn't mean. Let me go one step further. On top of that, there's also a percentage that I allocate for me to just play around with stuff, to do my own research, to whatever. So like yesterday I scooped up $20,000 of Bitcoin and a little bit of Ethereum. So I'm like, okay, well, there's kind of rising, and I've done some research on that. So I'm playing around. I'm calling it my petty investment money, although that's not petty money to a lot of people. But that's kind of what I've done, is let the experts do what they do, get the rate down, get the fee down as much as I possibly humanly can, focus on what I do well, which is build businesses, and then on the side, maybe do a little bit with quote unquote petty money. Is that I'm trying to give people practical advice. Is that a good thing to shoot for, or do you think I'm doing it all wrong?
Oh, I think that can work. I mean, I could easily point out some, concerns or some risk, but I think what you're doing is better than what most people are doing. And I think that's awesome. I mean, in my book, I highlight, many of the myths that exist in the financial world or in investing, and the things that conventional financial wisdom tells you that really may not be as it seems. And so, I like that you have read Tony's books. I think they're great books. I've read all of his.
What do you disagree about some of the things that he says? Just for a random example.
Oh, I'm not sure that I disagree with what he says. I mean, I think he has a vested interest in the firm that he is promoting.
Of course.
So that's one thing.
Yeah.
So it's not that I disagree with what Tony says in the book. I actually agree with pretty much everything he has in the book. I just think that people should be careful how much exposure they have to the stock market. So, if you are going to retire, and you're younger, but to anyone who is going to retire, in the next, however many years, well, everything looks good right now, but what if it crashes right as you want to retire?
Right.
The rest of your life, you can never make that money back.
Right.
That's lost. You don't have enough years in your life. So I think it's good to have exposure to the stock market, and good if your focus is long-term. Short-term, you really have to be sophisticated. You have to be able to use these algorithms. You're just, the game is stacked against you as a retail investor to the highest degree.
Of course.
So, I think it's good to have exposure, but And for you, I really like that you're getting into cryptocurrencies, because I think that, the two that you mentioned, Bitcoin and Ethereum, I think are fantastic places to, invest. And I'm going to call it more of like a hedge against the dollar that is going to
It's really
continue
what
to
it is. That's why I scooped
value.
it.
Yeah. So, I mean, and if it continues to go up, like I think it will, then that's just gravy. I just don't think
Yeah.
it's going to be worse than the dollar. So that's why I like that
Got it.
investment, or that, that hedge.
Okay.
So to me, it's like buying gold on steroids.
That's okay. I'm glad you just mentioned gold, because that's my next. I'm going to scoop at least $20,000 to $30,000 of gold and or silver, probably a combination of both. Is that something else? Because right now, like you said, I think we are betting against the dollar, like that, and I think all trends should indicate that to be the case. Would that be something in addition to crypto that you would advise people to look into right now? I noticed the prices have really come down.
Yeah, I think so. I mean, you always want to be careful buying anything at an all-time high. And if you
Of
are,
course.
don't spend everything in that all-time high. I think
Yeah.
you're always best to average in and average out of whatever asset you tend to go into. So instead of a lump sum in anything at any time, I think it's better over time. I mean, the stats show it's better to, dollar cost average in. And then whenever you want to sell, dollar cost average out. And so that way, you don't have to try to time the market.
Yeah.
So, I think it's great to get into those. I think, I made some cash in both Bitcoin and silver. I'm sorry, in both gold and silver, but I didn't buy them to make money. I bought them to not lose money.
Exactly.
So then when the
Exactly.
opportunity presented itself, it was like, okay, this is great. Same thing with, during the crash in, March, April last year, when the pandemic first kind of was rolled out. I bought at one of the lowest points, not at the lowest point, but not too far from it. And so I don't do a lot in the stock market in general. So I said, all right, well, I'm not going to be a day trader here. I'm going to buy and hold for the long term. But if for whatever reason there's an opportunity to capitalize because they do shoot back up, I'll probably do that. And that's what happened.
Yeah.
It shot back up. And I was able to take a profit, and then I was able to, move those funds. And then it happened again, and I did it again, and so on and so forth. But I didn't invest to day trade. I didn't invest speculating like, hey, I'm going to make a quick buck tomorrow.
Yeah.
I invested knowing that I'm comfortable holding this position long term, and I'm doing this not to, I'm not trying to be speculative here. I'm trying to say, hey, these are valued greater than they are today, and I'll hold them as long as I need to. So, that's just food for thought. But I do think that anyone that has all their exposure, so most people have like all of their investments in their business if they're an entrepreneur, or the vast majority. And then the ones that don't have it in their business and the stock market, and predominantly in qualified plans, which means there's no utility on that money. You can't really do anything with it. You could self-direct it. Most people don't do that. And technically you could self-direct it, and you could get into cryptocurrency or real estate or whatever you want.
Right.
Most people don't do that though. And so they lose all utility on that money. And once it is self-directed, there are some rules, and, there are certain things you can and can't do. There are certain, there are custodians that allow certain things and ones that don't. You just have to really do some homework. But most people just don't have much diversification. So if something happens and our economy tanks or their business tanks, they're going to be in a world of hurt.
Realistically, I know I mentioned a bandwidth concern before. I want to make sure we fully address that. Realistically, how much time do you think someone needs to dedicate? Like if you're blocking out your week and you say, okay, here's the deal. I'm going to spend 2 hours this morning just with thinking time, white space, just thinking about my week, what I need to do, what's going on in my business, what's going on in my life, so on and so forth. I know Gary Keller has a the one thing. He's got 4 hours a day on your one thing. And I've subscribed to that completely and seen tremendous windfall as a result. What do you think, if there is such a thing, of time allocation for really investing in your knowledge of investing?
Well, I find very few areas of education to be more important. I find very few places that are going to have as much of an impact as that's going to have.
Yeah.
So to me, I think it's imperative. And even as an entrepreneur, I still made sure that I was spending time investing my money. And that was good, because in some businesses, they didn't continue performing the way that they did. And so that was a nice, life jacket when I needed it.
Yeah.
But in other businesses, they continue to perform really well. And I would just continue to take additional cash and figure out what profit I wanted to put in the business and then how much of it I wanted to allocate to other investments. But the education piece is huge. I mean, there are two different ways you can do it. One way is, and I have clients that do both. So I have a mastermind where I basically vet deals, and I have just tons of deal flow for anyone in my network. And most of them want to learn how to do all this. They want the education. They want to know it. So in the future, they're experienced and they can make decisions on their own.
Yeah.
But some people in the group are busy, like what you're saying, and they're choosing to be too busy to actually learn it. So they just want access to the deals. And so they're happy to be part of it. And you know, their whole, you know, way of considering it is I pay a tuition to be part of this. And then I get access to these deals, and then I just get into the deals. So I don't have to spend any time doing it, and I can focus all my time on my business. So I've got a little bit of both, but I still think the best way to do it is to choose to learn and at least have a solid foundation on finances and investing. You don't have to become an expert, but you at least need to not be taken advantage of.
Yeah. Okay. That's good to know. Okay. So moving towards thinking about long-term prospects here, I think we're at a very weird time. I'm glad you mentioned the statistic about 40% of money in circulation was printed in the last 6 months. That is a terrifying. For those people who don't understand what that means, you're talking about inflation upon inflation. I mean, that's really a dangerous figure. And I think a lot of people don't understand you can't just keep printing money at the rate that we're printing money.
Yeah.
What do you
see? We have another 1.9 trillion that hasn't even been finalized.
Well, they're talking about another 3 to 4, aren't they now, I think?
Yeah. So it's probably going to be about 45% when all is said and done here.
My God.
And a lot of people speculate that there's going to be even more stimulus, money to be given out. So it'll be interesting to see.
For people that don't understand, and I think a lot of business owners, they're a little bit more sophisticated than others in terms of, understanding the value of a dollar. What should they be looking for? Obviously, I think it's hard. You mentioned something about people having, I think we're talking about Tony. It's like, well, Tony has a vested interest in making sure that Creative Planning does well. So, of course, I think that everybody kind of knows everybody has an agenda. The news, I mean, you don't know who to trust anymore. They blatantly lean one way or the other. What can people be looking for to assess this is where the market's trending? I'm not Justin. I'm not an expert. I have no idea what's going on. How can I prepare myself and prepare my business? And what do you think is to come?
Well, I don't think we've seen the worst of it by any stretch.
Sure.
I don't know when that's going to kick in. I mean, at the time that the government stops printing money, there's going to be a wake-up call. Now, I don't know how long they can keep printing money. They, quite frankly, have printed longer than I thought they would and more than I thought they would. So, it's anyone's guess. But one thing to pay attention to is the correlation between monetary supply and asset values. So if you want to hedge against a dollar that is clearly devaluing, there's no speculation. There's no wondering if this is happening, right? This is not an opinion. This is a fact.
Yeah.
The dollar is becoming less valuable considerably. So as the dollar decreases and monetary supply increases, the value of assets increase. So if you're sitting in cash, you're becoming poorer. If you're buying assets, you're at least maintaining because and you're likely going to be growing. But if monetary supply increases at 10%, the value of your assets are going to increase at that same 10%. Think about real estate, for example. Real estate has some intrinsic value, which is why I like it. It isn't going to go to zero. You can't own a building or a home and it's worth $0. Right? And if something happens and it's destroyed, you have insurance and it will replace, it's going to replace it for, whatever the replacement cost is, or maybe the value, depending on how you structure that insurance policy. So you should never have it go to zero if you are doing everything right. And so I like that. If I make a poor choice, I'm only losing some of my money, not all my money.
Right.
If I make a poor choice on stocks, or if I make a poor choice on another investment, I could lose everything.
Yep.
And so I like this idea of assets because there should be some value in them. and they should increase in correlation to more money being printed. And that is nice. That is a nice hedge.
Hmm. I'm just thinking about in terms of percentage wise, I agree with what you're saying, and I think that that's really phenomenal advice. What percentage? I know a lot of people want to have a safety net in terms of just cash for security reasons, right? It makes them feel better about having cash on hand. Do you say that should be 6 months, a year's worth of expenses? Do you think that it should correlate with that? What percentage should they have invested in something, whether that's some kind of an asset or the stock market or Bitcoin or gold or silver or whatever? Is there a percentage that you tend to recommend to people to really shoot for as far as cash on hand versus money invested?
Yeah, I think it's great when you can get to a year of expenses saved. I mean, start small, start at 3 months, get to 3 months. And then once you're at 3 months, get to 6 months. And once you're at 6 months, get to a year. So you can start small on that. But I do think that you should have reserves. So that way, in a worst case scenario, you're all right.
Yeah. Got it.
And by the way, that can be held in different places. Like, I don't know that it has to be held in cash. It can be held in cash, but it could be held in Bitcoin. It could be held in an investment that's liquid where you can get it back. You know, I have several investments that I do where I make anywhere from 10 to 11% on my money. I've got another one where I make anywhere from 6 to 8%, and another one where I make 10 to 11%.
Right.
But I can get that money back within 24 hours.
Right.
So, you know, it's totally liquid, but I'm making a good return.
Exactly.
So I don't have to keep it sitting in a bank.
Got it. That would be, you mentioned assets, and I think that's a concern for people is and maybe when I say people, I may be just referring to myself here, just to be clear. But there's a land opportunity. You and I live in Austin. There's tremendous opportunities. Austin is growing like a literal weed, and I've looked at land opportunities, and I'm like, okay, but here's the deal. If the market crashes, which I think it's a strong possibility. I think all things are trending that direction, or at least showing favorability towards that direction. There may not be people for some time that have the cash or that are willing to pay the money, that even though it's worth whatever it is that I'm willing to pay for it, right? And so now I'm depleted of my cash reserves, and I've got it sunk in an asset that I can't move and I can't liquidate. So I like that you said have assets you can liquidate in the event that you needed it. I think it's just really tough to navigate all those things, you know?
It is. And I mean, I do think you're pretty safe in Austin, because even during the last financial crisis and the housing bubble and all that, Austin fared really well, and it's just growing even more. You know, you've got more entrepreneurs moving here. You've got more investors moving here. You've got some of the biggest companies in the world moving here. And so you've got just this powerhouse city that doesn't have enough housing. I mean, the numbers are astronomical with how many people are coming to what the supply of housing is.
It's insane.
It is crazy. So, I mean, when I think about like a good store of value, that's an illiquid store of value, but it's still a store of value in my opinion. I don't see it slowing down anytime soon. And if you look at California numbers and a lot of the hot markets there's still plenty of room to grow in Austin. So I think we're just kind of at the beginning of it. And I think that's a great way to lock in some, again, assets that grow at the rate of monetary supply expansion.
Okay. Good advice. I'm going to pick up the phone as soon as I get off this call now, or this recording. So as
ironically, right before this call, I told you I had an investment deal I was working on, and it's right here in Austin. So
nice. I love it. So in terms of preparing, last thing I have for you, I know we got to wrap up here. We both have a hard stop coming up. Last question I have for you is, what do you recommend people do to make their business as recession-proof as possible?
Well, I think that to a certain degree, there's only speculation as to how long a business is going to last and how long that model is viable.
Sure.
I think the best way to make your business recession-proof is to make yourself recession-proof, meaning have the security blanket of, cash for a rainy day that, 1 year, work up to 1 year. I think being able to siphon off, 20% of your profits every single week, month, however you distribute into other investments is going to put you in a strong place. I think that investing in your business in a way that you can grow is smart. I think investing in your time, I mean, most entrepreneurs are a slave to their business. Most entrepreneurs left having a job to find freedom and autonomy, and not having to work for anyone else. And so they search for this thing and starting their business, and they end up working more hours and being
Right.
more of a slave than the employee. And by the way, that's okay, because for a season of life, and when you're figuring things out, you're able to work harder and make more, hopefully, right? But at a certain point in time, you don't want that, and you got to be careful. And so I always tell people the most important thing to do is to buy your time back. And you can buy your time back in a lot of different ways, but one of the ways you buy your time back is with assets that produce income. Another way you buy your time back is to stop being the bottleneck and stop being a slave to your business.
Yep.
And you do that by having the right processes in place and protocol and people involved in the organization. And so I think that there's, some wisdom in doubling down on a business that is doing well. I talked about how you may not want to be as aggressive with how much you're reinvesting into your business. I mean, the caveat to that is if you're going to exit really soon and you're trying to ramp up revenue, okay, that might be a time that you do it.
Right.
But you could still do it, investing 15% into 15% of profits into something else.
Right.
Just in case you can't sell it, just in case you can't get the price you want, just in case, something implodes during the time that you're trying to ramp up. If you're wanting this more long-term, then that's a little different as well. And then I would say even be more aggressive with your investments and set yourself up to be able to do it long-term. So, my book outlines a lot of this because I work with a lot of entrepreneurs, and I give a lot of examples in the book that can be copied. They can just be mimicked. So I think that those would be my keys to having a recession-proof business, which it's not really about the business. I think it's just too hard to have a recession-proof business.
Got it.
I think it's better to invest in recession-proof assets like affordable housing and agriculture and energy and e-commerce and cannabis. And I mean, the list goes on and on and on. And I would throw cryptocurrency on there.
Got it. That's phenomenal. Phenomenal advice. I could keep you here all day, man. This is a really enlightening conversation. Thank you for this. For people to learn, I know you referenced the book. Where can people find out about you and also the book or whatever resources you'd like for them to look into?
Yeah, so the book is called The Lifestyle Investor. You can go to lifestyleinvestor.com and you can find it there. You can find it on Amazon as well, but I have a bunch of, cool offers to anyone in your network that wants to check it out there. Cool. I'll do a kind of a free book. You just pay for shipping. And then all the proceeds of the book go to a charity called Love Justice International, which stops human trafficking. Right now, they're in 17 countries around the world. So every dollar that this book makes all goes towards that. So you're helping a good cause, but you're able to educate yourself as well. And if you go to justindonald.com, you can find out more about all the things I do. I've got an online course. I've got a podcast that a lot of people are just loving, where I get into all kinds of interesting deals and talk to a whole bunch of cool people. I've got a master class. I've got a mastermind. My private coaching is full because I really just accept a limited number of people. So there's a wait list for that. But cool. There's a lot of cool things on there. I got a bunch of free stuff on there. So I'm happy to be a resource to anyone in your network. And I've really enjoyed the time that we've been able to spend here today. So Chris, thank you.
Yes. Thank you so much, man. All right. I appreciate it. And guys, those links will be included in the show notes below to connect with Justin. All right, Justin, my friend, thank you so much. We'll talk soon.